Hello everyone, you're very welcome back to the channel. Today we're talking about BUX Zero. Specifically, we're talking about some of the recent changes that BUX Zero have made to their internal organization, their business strategy, and most importantly, their product, the BUX Zero investing platform. Unfortunately, these changes aren't positive, and BUX Zero as an online broker is certainly much less of a competitive option than it was, say, in 2022. I will give you my full thoughts on the situation at the end of the video, but before we get there, we need to go through the various changes that are happening and have happened at BUX Zero as of late. The first of which is layoffs. BUX Zero did cut some of its workforce at the beginning of 2023. Here's what was written in the NL Times back in January. The investment app BUX is cutting jobs to reduce costs. The Dutch company saw that investors have been less active since last year and decided to ensure profitability, CEO Jork Neef told ANP. However, BUX did not want to disclose how many layoffs were involved. Neef spoke of a small number. Nevertheless, several dozen layoffs are reportedly planned among the fintech company's few hundred employees. In 2020 and 2021, we were very spoiled, but last year was probably a little more realistic in terms of the number of users and their activity. As a result, the company looked at where the organization had too much fat on its bones and unfortunately decided to say goodbye to a few employees. As part of the restructuring, BUX will focus more on a savings plan that allows investors to invest in a basket of stocks rather than actively managing investments themselves. We see now that this is a very important issue. We continue to grow, but we also need to make sure we continue to make a profit. That way, we can continue to grow and also focus on developing other products in the long term. Evidently, BUX employees, like other employees of technology companies, were not immune to the widespread layoffs which have been happening globally as of late. As some of you might remember, I got the opportunity to visit the BUX Zero HQ back in 2021, and when I was there, I got to meet a lot of the staff. Unfortunately, some of those staff members have been affected by the layoffs, which of course is sad to see. So the context here is that BUX has cut its workforce to reduce costs amidst lower investing activity among retail investors. The other piece of news that came out recently was that N26, the German neobank, wanted to acquire BUX Zero but pulled out of the deal because of disagreements. N26 provides a similar offering to Revolut, and seemingly they wanted to allow their customers to buy and sell stocks and ETFs via the N26 app. BUX Zero was selected as a candidate to fulfill that function. Apparently, the deal collapsed shortly before completion because N26's complexity was too high, and in addition, the companies could not agree on a new management structure and valuation. The article goes on to say that the possible dependency on technology from ABN AMRO was an issue that was viewed critically at N26, and the current market environment and the assessment of business prospects also played an important role in the negotiations. N26 may have wanted to take the opportunity to acquire BUX at a relatively low price, which would make sense considering BUX's valuation would have been impacted by less users and less frequent investing. The article then goes on to say how N26 has been a concern for regulators because it has grown too quickly, and how the decision to not acquire BUX is one which will likely be well received by regulators. The reason why I wanted to highlight this failed acquisition is because it just goes to show that everything is subject to change. BUX Zero could have easily become a subsidiary of N26 here, and it's very likely that N26 would have scrapped the BUX Zero brand, thereby making BUX Zero's customer base an N26 customer base. The next change I want to talk about is BUX Zero's decision to shut down many, if not all, of their affiliate programs. For the past 2 years, I've been a member of BUX Zero's affiliate network. You're all probably familiar with how affiliate partnerships work. A content creator, such as myself, will have an agreement with a company, such as BUX, whereby the content creator is provided with a sign-up link that he or she can promote to his or her audience. If the audience signs up to the company via the link and certain other requirements are fulfilled, then the content creator gets paid a commission. Affiliate partnerships with content creators are one of the primary customer acquisition channels for brokers. I have similar agreements with Trading212, Trade Republic, and DeGiro. However, BUX Zero seems to be ending its affiliate programs in Germany, Austria, Belgium, the Netherlands, and Spain. The Irish program hasn't terminated as of yet, but I anticipate that it will in the near future. This is a somewhat surprising move. I would imagine that customer acquisition is still a high priority for BUX. I can understand if the company decides to to reduce the value of commissions paid out to creators in order to save on cost, but to outright end the program seems strange. With no advertising presence in local markets, you're more or less solely relying on organic reach to attract new customers. One explanation could be that BUX is swapping to a more business-to-business like strategy. BUX might partner with companies and offer its product to the employees of those companies. Perhaps we could see a BUX pension platform in the future, who knows? It's worthwhile clarifying that BUX could be ending its affiliate programs for the sole purpose of launching new programs sometime in the future. I don't know what their intentions are. The important context for you is that BUX seems to be changing its customer acquisition strategy, either to save on cost or to focus on a new line of business. The question is whether or not the needs of its existing customers will continue to be the top priority going forward. This is especially relevant for new product features, the financial instruments available on the platform, and the pricing. Speaking of pricing, let's talk about the biggest change that is coming to BUX Zero on the 1st of April 2023. BUX Zero is overhauling its pricing structure, and by pricing structure, I'm referring to the fees that BUX Zero charges its users. These fee changes are not good, and no matter what way you look at it, it's going to become more expensive to invest using BUX Zero from the 1st of April. The first change concerns market orders and limit orders for EU stocks, US stocks, and ETFs. Previously, investing in EU stocks and ETFs using market and limit orders would cost you €1.50 per transaction. That fee is increasing to €1.99 per transaction, an increase of 32.67%. In other words, investing in EU stocks and ETFs is going to cost you 49 cents more per transaction from the 1st of April 2023. BUX is also limiting the number of zero orders that a user can carry out to 3 orders per month. This means that only the first 3 orders in EU stocks and ETFs each month will be commission free. Investing in US stocks previously came at no cost using market and limit orders on BUX Zero. A new fee of 99 cents is being introduced for both order types. However, BUX Zero is also reducing their foreign currency translation fee for US stocks from 0.35% to 0.25%. So while you're paying a new fee of 99 cents to invest in US stocks, you're also paying less of an FX fee, and the two changes can cancel each other out. Essentially, if you're investing a minimum of €1,000 per transaction in US stocks, then you'll actually save money from these two changes. The bigger your transaction size, the more money you'll save on fees. However, the vast majority of investors aren't going to be able to invest a minimum of €1,000 every time they purchase a US stock. Therefore, this change isn't favorable for your average retail investor, at least for those who are Euro cost averaging small sums of money into US stocks on a regular basis. BUX Zero is also removing the €1 fee associated with their savings plan functionality. The savings plan feature is how BUX Zero users can automate their investments into the market. This is a positive change which brings BUX Zero's auto invest offering in line with the likes of Trade Republic and Trading 212. Then we have what is, in my opinion, the worst fee change of all. BUX Zero is introducing a €2.99 monthly service fee. You heard that correctly. BUX is now charging its users €2.99 per month for the luxury of having a BUX Zero account. This fee will be taken from your cash balance or from the proceeds of your investment sales each month. If you don't have enough cash in your account to cover the fee, then your account will go into a negative balance. BUX has the right to terminate your account if it reaches a negative balance equal to 12 months worth of fees, i.e. €35.88. €35.88 per year for just having a BUX Zero account. This serves as a nice transition into my overall thoughts, but let's stick with the monthly service fee. What is BUX thinking here? None of their competitors charge a monthly service fee. Trading 212, Trade Republic, DeGiro, none of these brokers are charging their users a fee for simply having an account. I could maybe understand this fee if it was tied to inactivity, but the fact that it's going to apply irrespective of whether or not you're actively using your account to invest, not good. Any benefits associated with reducing the FX fee and eliminating the savings plan fee is just completely written off by the monthly service fee. In fact, based on some rough calculations, assuming you're investing in your savings plan on a monthly basis, it looks like you'd need to invest €23,900 €1,900 per year, or €1,991.67 per month, in order for you to save money on fees with the new pricing structure. And that only applies if you're investing exclusively in US stocks. Let's be real, most BUX Zero investors aren't investing €23,900 per year in their savings plan. Those who are probably investing in ETFs, so the savings wouldn't even apply. These changes are going to make BUX Zero highly unattractive as compared to their competitors. I can't think of a single good reason as to why in 2023, with these changes, you'd optionally choose BUX Zero over the likes of Trading 212 or Trade Republic. Sure, some people could cling to the argument that Trade Republic's use of payment for order flow is a negative factor, but there is no data to support that argument. In fact, the data shows the opposite. All of this is before we consider the fact that BUX Zero has dropped the ball in terms of its ETF selection. Recently, I made videos covering the best ETFs for European investors in 2023, including S&P 500 ETFs, Europe ETFs, emerging market ETFs, and all world ETFs. BUX Zero, as compared to Trade Republic, DeGiro, and Trading 212, offered very few of the most competitive ETFs that are available to investors. How can you expect to attract new users when your fees are much higher than your competitors and you don't offer the most competitive investments, which also happen to be the most popular investments among users? The biggest takeaway from this situation in my mind is that BUX is under pressure from a profitability perspective. Less users, less frequent investing, layoffs, termination of affiliate programs, higher fees, you get the picture. They're introducing changes that will earn them more money, and I don't blame them for doing so from a business perspective. However, there is no denying that they're less attractive as a result. Even their CEO agrees with that. At the end of the day, what's happening at BUX is a great reminder that the facts can change in the blink of an eye. Nothing is guaranteed. As an investor, it's your responsibility to ensure that your broker is and continues to be the best broker for you. If you're a BUX Zero investor, it might be time to consider swapping to another broker, but that's just my 2 cents. Let me know what your thoughts are on the BUX Zero situation in the comment section. If you want to see what the likes of Trading 212 and Trade Republic have to offer, I'll leave both of my tutorial and review videos on screen now. Thanks very much for watching, and I'll see you soon.